Welcome to another month of June. Now, not yet, but sometimes we need to forerun the forerunners. And therefore, we will talk about if it makes sense and if you should buy stocks in June. Usually, we say sell in May and go away, but actually we went quite good in May, and therefore the question is, will the sell in May shift to June? We will talk about the bearish side but also the bullish side, and then we come to a conclusion what we can do. So therefore stay tuned, and don't forget, we want to break the like record on this video, 851 likes, so make sure to smash that like button. Biggest bull driver is currently liquidity. Liquidity by the US government. The Fed did everything and even more to make sure that the markets have enough money. Now, this is always a thing that if we have so much money in liquidity, Fed said that they, increase their QE. They said they will buy corporate bonds. Something in this matter and this magnitude was never done before. If it's good for the long term, well, rather not. But what we see here is like a nuclear weapon that is just used against all the bulls that driving the market forward. They having the strength of this nuclear weapon to bring new highs out there. Now, obviously, this is very bad for the bears because the bears thought that this is just a bear market rally. Now, we shall see, because in the terms of bears, we will talk in a second, and we are seeing something that is really driving the markets by liquidity. And if something like this happens, and we saw that the Fed is actually doing this also specifically for the market, like there was times in the last couple of weeks where the market really went down, and then the Fed came out with those kind of statements. So, and they said they are a long shot not having all used their tools. So we shall see. This is, in my personal opinion, the biggest driver for another and further bull run on the market. On the other side, you see that the S&P 500 is going direction all-time high. Now, why is that? Because the S&P 500, most of the stocks that value inside this S&P that driving it so high are digital companies or companies that are really strong in this business and actually benefit from that, right? Think about Amazon, think about Microsoft. All these companies are really benefiting from this lockdown and stay home economy, and therefore you see that this is so great for the companies that we see a much further drive to digitalization. And therefore it's not that markets are overvalued, but the valuation inside the indexes are heavy on those companies, and therefore the bad companies don't value that much in the index. So you see the index going higher and higher, and therefore I believe that you having some valuations of companies that benefit, Netflix, Microsoft, Amazon, that are actually true or right in the sense that these companies actually profit from this current health situation. So you have this back and forth, but this is, in my personal opinion, bullish on the market. Then we see this word quite often in the news, V-shaped recovery. This means actually that the economy went down and then we went back up where we came from. Now, this is what many bulls out there are hoping, because we are seeing this as the best possible outcome. However, this V-shaped recovering arguments are not quite related to those bearish and doesn't work together with, for example, an high unemployment, right? We shall see how this V-shaped recovery actually work, and if it's global, guys. It can be that some countries like China, who are totally different politically and economically, have those kind of V-shaped recoveries in certain areas and maybe in the whole economy, but it's not going to be for every country out there. And one of the biggest bullish arguments that I can see here in the market in June are positive vaccine news. Now we have some news from Oxford, the main vaccine news that I'm watching, because those are very experienced guys there in UK. They have already developed some of the biggest vaccines ever and have very good opportunities to also solve this mystery. And if this hit the market that we have in vaccine, and that most of the people can be vaccinated, in this countries like US and Europe and other countries before or starting end of this year, this would be absolutely positive, insane news. So watch this news definitely very, very closely. The bearish side obviously has some very strong arguments as well. And the strongest argument ever is maybe that the unemployment rate is high as it was in the Great Depression, the last time that high. So we see that this sky high unemployment in the US is pressuring the economy to have demand. So we see also many companies that have the demand is pressured because of this. People don't travel, people don't stay in hotels, people don't spend their money. So all of this combined is obviously very bad for the economy. And there is obviously this Federal Reserve money and the stimulus, but this goes mostly into savings, because people who live paycheck to paycheck, they actually have to spend the money, and people who receive it and still has some money to pay the rent and all the normal expenses, they really think, do I spend the money right now, or do I save it for a rainy day, right? Because maybe my job will be the next that will be cancelled. So these are very strong arguments for the bearish side. But if this is not enough for you, then let's talk about technicals. Now we are having like the Fibonacci resistance at 2,950,000 points at the S&P 500 and other indicators that currently we are scratching, a huge resistance in the indexes and different stocks. We're seeing sky high valuations of companies, and therefore I believe that, also from this side, you have to understand something about the stock market in 2020. Lots and lots of computers are trading on the stock market with smart money. Look at the Renaissance fund, right? One of the most successful funds out there that is totally depending on an algorithm. And algorithms are seeing exactly those technical signs to trade and then sell and buy stock. So if those bearish signals are throughout the market, then the possibility is higher that at least short term, we see that the market is going down and will become bearish. One of the last things that actually really can bring down the market will be a second wave in the health crisis. Now we see a lot of videos that people get together back since the lockdowns are eased. People are thinking like something like this, it's fine to get together, but in this types of situation we will see if we either have a crash down on our health system, because the health system will not tolerate so many people that are infectious, or we will see that the lockdown that we did was maybe some kind of overreaction, which was not bad, because obviously this was good for the health industry and health crisis, but it was devastating for the economy. So we shall see this in the next couple of weeks. The conclusion of this video needs to be news related. In my personal opinion, there are two big news that will drive the market further down or up significantly. This is from the bullish side, the news about a possible vaccine, a positive news that more and more people can get the vaccine in very short time. On the other news, a second wave worldwide that will develop over the next couple of days and weeks and months, will also drive the market further down. So these are the two big news that really need to be watched. However, I believe, and I also personally buy, if you follow this channel, make sure to subscribe if not, and don't forget our record 850 like promise that we need to fulfill here on this video. Thank you very much for doing this, smashing the like button until it's super blue. Okay, I believe that this is so important to watch that I don't feel there's so many technicalities or other things, unemployment, that will matter more than this two big news. So, however, I'm also buying stocks here in the stock market right now as of this minute because I'm investing into growth companies. I have a portfolio of certain selected companies that you can follow on this channel that I believe will 10 times, 20 times, 30 times their value over the next couple of years. And if there's a good opportunity of either of them, some stocks are going higher, some stocks are going lower today, and I use this lower period just to load up on those stocks. And therefore, I personally believe, finally saying that growth stocks are stocks that you really can buy right now to make sure that those companies can double, triple, or 10 times your money if you are going with the right ones. And you can always make sure to spread your money across those that are making the future, because then you have a really good shot to discover the next Amazon, Netflix, Apple, or maybe the next Tesla out there. Okay, so thank you very much for watching, and don't forget the like.